Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of the 17th of May, 2023, 6:15 p.m. Central Time. You know, it's a hard market to understand, let alone grasp. Why is it going down one day big? Why is it going up one day big? Why did it go nowhere on the reopening of the evening session last night and then take off big to the upside in the stock indices this morning? Well, I think I can answer some of that for you and help you with it, but that's all I could do. The supercharged moment came after President Biden today held a news conference, broadcast on TV, all the news stations, in which he said he's leaving, but he's not leaving. He'll be in communication all the way through, that he's done what I mentioned nicely yesterday, and I saw it and I knew what was going on. He has pushed out of the negotiations McConnell and Schumer. And the negotiations are now between the president's staff and Speaker McCarthy's staff. They have to get done what they have to get done so they can present it to the other parts of the chamber. First, it'll go to McConnell and Schumer, and then from there into the House and into the Senate. There's a lot to be done. What the president also said is, number two, there will not be a default. And that put the market at rest, because we've heard that from others. He said it again before he left. I think the market wants to believe that. I believe it. It's political suicide for any party to put the country into a default. It's absolute suicide. When that happens, you have no idea, if you keep reading like I am, what can happen, from mortgages to interest rates to not getting checks for Social Security. Nobody wants that, especially you got an election coming up in 2024. I believe that won't be the case. But unlike them, I don't see how. Tomorrow's the 18th. You're telling me in 12 days, they're going to suddenly, everybody, number one, come. And I think what can be done is I think that the speaker and the president's teams can come together and get a deal that they propose wrapped up. Doesn't mean it'll pass. Now it's got to go into the different chambers. How fast is that going to be debated? What about all the strings? What's there? Who understands it? Can that get done before the 1st? The calendar says it can. I don't have the faith in that chambers, two of them, to get it done. I think the logical thing that will happen, and I've said this all the way along now, is there has to be and there will be an extension. I've also said I don't think the Fed is going to pivot down on interest rates. I could be wrong on everything, all right? I'm Swiss cheese. I'm just another guy out there. But that is what I believe. And as I look at all that, I think that if you get the extension, it gives everybody maybe another 30 days, and they're paying the bills to get whatever's going to be done hammered out. All right. If you're trying to just shove it down everyone's throat in a 4 or 5 day period, and you believe that can be done, great. Got my fingers crossed. I have my doubts. So the stock market rallied. Now, let's talk about everything. If you've looked at the yields on the bonds, the notes, be it the 2-year, the 5-year, the 10-year, and the 30, you've taken yields right back up like this, all right? You were at 3.9 and a fraction recently in the 2s, and now you're at 4.1 and something, whatever. And it gets even worse in the 30-year, because suddenly that market, if you looked at what it did, it went all the way back down to the key 100-day average of closes, all the way back down there, and to the Bollinger Band area. And it finally got itself a little bit of support. So you're telling me the dollar's going up. We're back to 102. We're not under 100 anymore. We're back to almost 103. Interest rates are going up over 4.15 or whatever it is on the 2-year. And the stock market's going to go up at the same time. We don't know what the Fed is going to do, but I don't see them pivoting down, period. I don't see any reason. I'm not in the camp of these others that say it'll pivot. Why? Because the economy isn't acting that weak. And you want me to believe in the stock market that they're going to get the debt ceiling issue done right away without another major fight. Okay, That's why you're all over the board, and that's where the volatility is coming from. Did the Biden administration miss buying the crude? Of course they did. You knew that was going to happen, and so did I, and I was overly vocal, overly attacking, without question, the whole administration on where were they when we were going to $64. I said, there's your window. And now they want to put out their tenders, and you're back over the number that they said they'd buy it as a top price. No surprise. If you think that's a surprise, boy, are you wrong. Grain markets falling apart. What went on there? Well, they brokered a 60-day deal on the Ukraine grain shipments. Now, what you don't hear and what is wrong that you don't hear, back just in October, November, there was about 10 ships a day that were verified to pick up the grain and do whatever. We're down to 3. At the same time, Russia is about to sell an all-time record amount of wheat on the open market. So what they've effectively done is they throttle back and make all the paperwork where it can't get done for Ukraine, very minimal amount. And they're out there feeding the world market with their grain and, of course, their oil. And they're taking in income so they can support their war effort. That is what's going on. I've given you the simple explanation. Look it up, read about it, you will see what it is. So trying to fight now that grain's there, and eventually the Ukraine grain has to find somewhere to go by July, a lot of it, because you got a harvest that just came in wheat. What are they going to do? Remember, between Russia and Ukraine, you got the world powerhouses in wheat. They're holding back the Ukraine part, so their part gets more business. They should have a record year this year in wheat exports and revenue from wheat in Russia. When we look at the S&P, with all this craziness, you're up 0.75 percentage point for the week so far. When we come to the chart action, you're trying the upside. Now, let me show you something, because I think it is important. We step back here, and you can visually see you had been trying a downslope. You can almost see the line, and you had an upslope. You can almost see the line there. Visualize it coming like that. With the action today, you're trying to break out of that downtrend line and follow through to the upside. When we take a look at the swing line, it turned up. Now, if I take you back, you can see how the market was faltering here. Let me get rid of today's action. And you had here lower highs, higher lows, just going nowhere on the market. With today's action, you attempted the upside breakout. That's what's going on. Where did the market fight its battle? How often, if you watch me, and how often do you hear me say, I think the market's going to fight battle at the 18-day average of closes? You don't have to buy into what I say, but it's hard to deny that that's exactly what occurred. So now, where's resistance if the market goes up? Well, the supports are all under the market. You've got a long-term average, the 200 here. You have the 18 and the 100. You got a bullish setup on moving averages. Classic bull setup where the shortest term average is over the medium term, the 100. 100 is over the longer term, 200-day average. So that leaves the Bollinger Band. That number is again at that 4,200 level. We just keep going to that number for the key areas. So if it goes up, that's where I'm expecting the resistance. You're not yet overbought, so you could easily do that. You know you're going nowhere. Listen to me on what I think. If you get back under here, the 4120 area. If you take out the lows of 2 days ago, you got a real problem in the market. It's not bearish. It's just not going anywhere on that chart. The bullish market has been the NASDAQ. What my fear is, and others, is it getting ahead of itself? My work says no, but my indicator, if the red line closes under 79, that will be the sign that this wave is over to the upside. So far, there's no sign of it. So far, each break in the market is being bought. Now, if you've taken my enhanced Bollinger Band course, and I'll show you that at the end of this, I'll show you on the website where everything's at. This teaches you how that works. And of course, as you get up to the bands, you take money off the table. That's what I teach. And you're buying on these pullbacks. And you'll say, well, how do I know where? It's in the course. There's a line, an indicator. It shows you where to do it if you want to try that out and learn about it. Is there a trend in the Dow? Well, there was a downtrend. And the market hit its targets. Let's go take a look and see what I meant by that. Let me come right back here. Do you disagree? You have lower highs, lower lows. You go down to the Bollinger Band. You're already into an area here that is oversold. So I say that now you get back down anything in here, the pros are going to run for the hills and get out of this market lickety split. Yesterday, you go down there, lickety split. There's no edge. You're not embedded. You're down to the first challenge of the 200-day. The other challenge of it, you can see right here, caused a rally. And bingo, it repeats itself. You learn this again in that course. And does it work every time? Nothing works all the time. Does it have a good probability? It has a good probability. Even if it's wrong, there's nothing wrong with covering a short. Could you leave money on the table? You could. You're not reversing long, but I'll take that every single time that it offers it to me because it's a safety move. And by the way, this piece would have said all shorts covered. In the Russell, okay, the Russell changed course on you today. Where's the market fighting? What is the pattern? Okay, coming in, you have lower highs, lower lows. What will break the pattern? In the most simplistic way, if you take out the high that I'm pointing to, which in this case would have been Monday's high, the market would then have higher lows, higher highs if you don't take out this low first. So we take a look at the next day, today. You take that out. Where do I think the resistance will be? You know I'm going to tell you the upper Bollinger Band. You know I'm going to tell you that if you're long, I think the pros will dump this that fast. All right? I really believe that. I don't think this market has legs to it, challenging the Bollinger Band for the first time in weeks. In the T-bond market, this is what I just said. The market hit the Bollinger Band and the 100-day average, and you're oversold. I think the pros took their money off the table. Now, right now is when I think they did it. Could it go lower? Sure. Trend is down, but it's oversold. It's not embedded. The odds of staying under the 100-day average in the Bollinger Band, well, the Bollinger Band just 5% of the time. That's not where I'd want to be. In the 5-year note, you're oversold. I think if you can get down to this number, the 109 level, I think the pros are going to cover their shorts there in this market. If you get back over 110.7, I think they're out of their shorts as well. The trend is down, but that oversold condition is worrisome. In the dollar, you're back over the Bollinger Band. You only stay 5% of the time over it. Take a look back here and take a look over here when you do get under it. All right, so I'm not saying it can't run. I'm not saying the world can't come apart, but it's probabilities. And that's what chart action's about. It's probabilities. Investing is different than trading. Please remember that. You're going to give me all the reasons for your investments in artificial intelligence and the way Warren Buffett trades, or he doesn't trade, the way he invests. And I'm going to come at you with the way the traders trade. And the reason you use futures is the leverage for trading, not really investing. It's my opinion on it, and that's how I look at it. Although Robinhood's going to have a big difference because they're now going to list a bunch of stocks and ETFs that you can trade almost 24 hours a day. Admittedly, and I gave them credit, they warned people. They said, folks, if you think the evening trade is anything like the day trade, you are so wrong. You get markets that can be very wide, no reality to them, just because there's no bids and offers out there. And if you want in or out, you can get crazy prices, okay? Not necessarily to your good financial health. And you can see the market is over that. Okay, the probability is that the market's going to pull back under it. Am I bearish? No, the trend is up. It is overbought, but I do think the pros are taking money off. We have what we call price counts at the Linn Group, and they issued a price count today that we might be going back up to the 103.50 area. That would be the first objective on the price count. That's the highest probability that we have if it goes up. In the euro, you're underneath the 100-day average and you're riding the Bollinger Band now. Now, this is a little different trade. Why? This is called the Gorilla Glue trade. This is when you hit the Bollinger Band every single day and you start driving it down and you force the market to embed. Until the embedded reading is lost, with that closing over 21, when it embeds, the market feeds on itself, and it's one of those trades where your broker says, no, it's oversold, it's going to bounce, and it doesn't seem to ever bounce. It's called the Gorilla Glue trade because it locks in on that. You'll know it's coming away from it when you get that reading over 21. In the British pound, you are still in a market that is reeling from the higher quarter point hike, and the rest of from there on, the market just went down. It's already in oversold territory. I don't know that it has enough power in it since it's so oversold to make it to the Bollinger Band. I wouldn't be surprised if it gets back to fight at the 18-day average. In Bitcoin, as I said, this is broken away from the NASDAQ completely. This is a market trading on its own. It made its downside targets, and it's oversold. I could see reasons for the market to just drift around and not do a lot. In the Brent versus July crude, well, the market got back up, as you can see here, into the 410 area, backing off a little, but not really doing a lot. And as you know, I thought that we'd come up in all these back to the 18-day average. You had the higher lows, higher highs, and that's where you're at right now. Same in WTI. And when you lost in gasoline, the embedded reading, it said you're probably going to go back to the 18-day average. It's done even better. It's climbed here. I've also moved to the July Rebop gasoline. So the rally, what we'll call the Memorial Day rally, has occurred. Not going to occur. It's occurred. The market's built in that demand already. I've been saying it to you each day here, and it has done that. I have serious problems that it's going to just be able to run through that Bollinger Band and go anywhere, given how overbought it is. In nat gas, I think a bottom is being carved out right now, and we will see just what we've got. We know that there's plenty of natural gas and prices aren't going lower, plus the weather's changing. In Chicago, next week, we're going to be in the high 80s most of the week. So as we're getting warmer and warmer weather here, down south, it gets even more. The air conditioning needs start picking up. And, you know, in New York, you hit 90 degrees, you can't even function. It's just the way the city is. It's canyons of buildings. So the heat is now starting to come. It's still coming into the end of May. And then we get into that hot weather. So keep your eye on all that. It's going to be important. Another thing that happened, you know, in Chicago, they're talking about we don't have clear skies right now. I wrote in my newsletter that people don't realize that, since we're talking in energy here, that in Alberta, where all the oil fields are, there are huge out of control blazes. And now we've had the cool weather come into the Midwest as it's coming out of Canada down around the Great Lakes, and it's bringing that smoke with it. And you can see it when you look in the sky here. We're not able to see the blue sky that we would typically have. All the weathermen are talking about it. I've been there, done that, and that's what this is right now. And that's another factor that nobody's talking about. Pay attention to that. It's a big, important factor that you're going to lose some of that production now. I wrote about it yesterday and how many barrels a day are already shut in from the different wells. Now, we talked about other things, and I said, here's my website. I know a lot of you use TradingView. If you go to the website under software, you'll see it right there. Give it a click. That is how, when you do that and you sign up for it on our website, we go into TradingView. We'll get your username from you. We turn everything on for you, and we send you an email. You're now set up and ready to go. For our free offers, they're right through here. And the Bollinger Band course, all you need to go here and you can see the word education. This is where all my courses are. They're right in through there. When you're a member with us and you're getting my subscriber videos and so on, you have your own login area if you come here as well. So you're able to go there and get everything that we have possibly there for you. And this is what the website looks like if you've not been to it. I'm always changing the titles of it. The videos from the morning's flash video to my evening videos, this will appear there. So we're always updating them for you there. I'm Ira Epstein. Remember, I'm not going to be here on Thursday and Friday. I hope you miss me. I will be back here on Monday doing these videos with you again. I'm going to take 2 days off and wash out my own brain. You have a great day, a great couple of days. I'll see you when I return.